Assalamualaikum. My name is Aina Afrina, student ID 2000030, and I'll be sharing with you about Sukuk for accounting. According to Securities Commission Malaysia, Sukuk refers to certificates of equal value which evidence undivided ownership or investment in the asset using Sharia principle and concept endorsed by Sharia Advisory Council Malaysia. AOFI, or Accounting and Auditing Organization for Islamic Financial Institution, describes Sukuk as securities of equal denomination representing individual ownership interest in a portfolio of eligible existing or future assets. Think of Sukuk as Islamic bonds that are structured in a way to generate returns to investors and similar to an asset-backed security. They are issued and traded in compliance with the principle of Sharia, which prohibit riba. A sukuk can be structured to offer a fixed return similar to the interest on a conventional bond. But unlike a bond holder, a sukuk holder is granted an ownership interest in the asset or business being financed, and the return is tied to the performance of underlying asset. When investors buy sukuk and become sukuk holders, they receive a certificate from the issuer as evidence of ownership and are entitled to receive periodic profit payments on the principal amount invested. Upon maturity, the sukuk holder will get back the principal amount of investment. As with most Islamic finance instruments, there are different methods of achieving the same objective. For instance, the periodic profit payments may come in the form of profit sharing or rental from the asset. Different types of sukuk are based on different structure of Islamic contract like murabaha, ijara, istina, musyarakah, and ijtimar, depending on the project the sukuk is financing. Differences between sukuk and bonds. In sukuk, ownership, partial ownership of an asset. Bonds, debt obligation. For compliance, the asset that backs sukuk should be compliant with Sharia. For bonds, complying with law of country they are issued in. The face value of a sukuk is priced according to the value of asset backing them. Bond pricing is based on credit rating. Sukuk holders receive a share of profit from the underlying asset, sukuk, and accept a share of any loss. For bonds returned from bonds correspond to fixed interest, and their principal is guaranteed to be returned at the bond's maturity date. Sukuk holders are affected by costs related to the underlying asset. Higher costs may translate to lower investor profit and vice versa. Bondholders generally are not affected by costs related to the asset, project, business, or joint venture they support. The performance of the underlying asset does not affect investor reward. Sale of ownership in sukuk in the asset backing them. For bonds, sale of debt. There are few of sukuk accounting issues. The first accounting issues is the accounting standard used by the originator during the sukuk issuance. We assume that the international accounting standard are accepted and fit with Islamic finance, except the standard is incompatible with Sharia principle because Islam is not against any accounting standard unless they conflict with Sharia, at which most important principle is prohibition of riba. Although most business activities must be permitted by Islamic law and forbidding gharar and maisir. More than 100 countries currently subscribe to the IFRS, International Financial Reporting Standard, while most other jurisdictions permit the use of IFRS in at least some circumstances, or some countries use their national standard which are based on IFRS. While some requirements may be comparable with IFRS, others are not. Foremost among Islamic accounting standards are those issued by IOFI, but some jurisdictions have local developed Islamic standard which may or may not based on IOFI standard. Furthermore, using international standard to account for sukuk transaction will enhance the comparability and comprehensiveness of financial report and will allow to wide range of companies to engage with Islamic financial instrument without concern about the difference between accounting standard. By reviewing number of sukuk issuance, most of sukuk issuers do not publish their financial report, but the financial results should appear in the consolidated financial statement of the originator. Second issue, the origin is consolidate the SPV. Uh, the originator of Sukuk usually establish SPV to issue Sukuk, whether it is a sovereign or corporate Sukuk. This SPV is totally owned by the originator. The manager and staff recruitments have been doing by the originator. The SPV have been established for specific purpose and activities, and accordingly the originator has a control of the subsidiary. A parent company only has a subsidiary when the parent controls the subsidiary. If the parent does not have control, it does not have subsidiary, then it accounts for its investment in a company as an associate under IAS 28 investment in associate, or a simple investment as a financial asset under IAS 39 financial instrument. IFRS 10 says that a company has control of another company, the investee, if and only if it has power over the investee, which means that the investor has rights that enable it to direct the subsidiary's activity, exposure, or rights to variable returns from its involvement with the investee, power over the investee to such an extent that it affects the amount of return investor receives from the investee. The third and last Sukuk accounting issues is transfer of asset. Generally, the originator transfer an asset to a special purpose vehicle (SPV). This transfer could be a transfer of ownership of the asset or right of usufruct of asset, and sometimes the transfer is arranged with an arrangement for the asset to eventually be transferred back to the originator. With regard to the classification of Sukuk into the asset backed or asset base, under asset backed Sukuk, the Sukuk holder has a source to underlying asset, and this asset must be separated from the originator books. While asset based Sukuk, the originator keeps the asset in his book. Thus, Sukuk holder has beneficial ownership in the underlying asset. Recognition of the asset from the originator book is a very important and controversial issue, and related to other issues like the type of asset and the classification of the certificate. Under IOFI Sharia Standard number 17, section 4.2, the investment Sukuk represent a common share in the ownership of the asset made available for investment, whether these are non-monetary asset, usufruct, services, or mixture of all. That's all. Thank you.